Hey, good morning. This is Mayor Valensky with Driving Markets. Okay, anything said in this piece an opinion only. Clearly, yesterday you could see by Jerome Powell giving his State of the Economy speech to Congress, markets fell off the cliff. The Dow was down 574 points. Nasdaq was down. S&P was down. The US 10-year Treasury was slightly down. Interestingly enough, dollar shot up in anticipation of rising rates and rising inflation. He clearly stated yesterday that they are going to have to be more aggressive and raise rates faster than anticipated, than they thought of, simply because inflation is not going down. Inflation is not going to go down. It's not going to go down to the 2% level that the central banks in the US, in the UK, and in Europe want to see it at. Those days are over. Inflation is going to stay at 4.5% to 5% long term. Short term is going to go well above 7% in the US, probably to 8% or 9%, and rates are going to rise well above 5%, as I've stated over and over again on this channel and on other media channels, that interest rates are going to go much higher. As a result of his statement in his speech yesterday to Congress, equity markets fell off. The dollar shot up against all the majors in anticipation of rising rates in the US. The dollar will get stronger. So it was stronger against the pound, against the euro, and against the yen. Cryptocurrencies also were slightly down overnight. Bitcoin was slightly down, it's below the 22,000 level. But as long as this fear of rising interest rates and inflation, you're going to have pressure on equity markets going forward. Okay, the biggest victims yesterday of this speech was the major banks, which was Goldman Sachs and J.P. Morgan Chase. They all fell 3%. The smaller banks fell about 5%. Okay, Nasdaq shares also fell down. Tesla was down 3%. Remember, I've said Tesla is going to go down to about $140 a share. Okay, Meta's also going to go down because they are susceptible and sensitive to interest rate rises, because the high-tech sector needs cheap money. And as money becomes more expensive, the high-tech sector is one of those victims, one of those sectors that suffers the most. So that went down also yesterday as a result of Jerome Powell's speech. So you can see throughout 2023, especially up till June 2023, you're going to see interest rates rising well above 6% in the US. You're going to have inflation well above 7% in the US. Now, the UK also needs to increase interest rates and is not doing it. And Andrew Bailey is well behind the curve, and interest rates in the UK are going to go well above 5% by June this year. They're just simply trying to delay the pain in order that the Joe public won't suffer high interest rates, and therefore the mortgage rates will go up and people will get into more difficulty. So you're going to have rising rates, rising inflation, stronger dollar. Oil is down yesterday. Gold was down yesterday. So the commodities, copper, palladium, all sank on the back of Jerome Powell's speech. So expect more rates, more inflation. Catch you later.